Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, have a beautiful retirement. I am one of your co-hosts, Ben Barzideh. Of course, as usual, I have with me my esteemed co-host, Matt Nadeau.
Hey, everyone.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located locally right here in Barrington. And we are fiduciaries, and as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies that are buying everything up these days.
And of course, as always, we want to just stop, take a moment, say hi to all of our clients. You tell us, you listen to us, at least most weeks. And we just wanted to let you know that we really appreciate the trust you place in us. And of course, we love every one of you. And we have a great show. We're going to jump right into the topics. And in the first segment, we really want to talk about what's been moving the markets this week. Specifically, there's been a tech sell-off. So why? Why is it selling off again? We're going to get into the details. And then second, we want to talk about a company that's gotten a lot of buzz this week, Micron. And you could make the argument, maybe it's the most important company in the world right now. We're going to talk about why it's so important. And then later in the show, might be a little boring for some of you out there, but it's pretty important. It's Medicare. We're going to talk about how it works, the different plans, what they mean. You want to stay tuned to hear all about that.
And we have some big news for you. We have one of our fantastic workshops coming up. So if you're a retiree or pre-retiree and you want to learn more about our firm, our philosophy, we invite you to a very exclusive educational dinner workshop. That's right. It's a dinner workshop. We're going to serve a very nice steak or fish. And it's going to be at a local country club on Thursday, July 16th at 5:30 p.m. And during this complimentary event, we're going to cover the new tax laws that went into effect, how it may impact IRAs and RMDs, what everyone wished they knew before receiving an inheritance. We're going to talk about tax reduction strategies, Roth conversion opportunities, and the biggest risks retirees face in the year ahead. And of course, we're going to get into our Advance and Protect actively managed investment models. It's going to be a fantastic event, all of that valuable information while enjoying a refined dining experience at a very intimate setting. So seating is limited, and this event will fill up quickly. To reserve your spot, call 847-780-2980 or go visit bnwealth.com and you can sign up for it there.
Yeah, and we had huge crowd last time. We almost had to shut the doors. So please call ahead of time. We'd love to see you. You get to meet us. But anyway, let's dive in. Let's talk about what moved the markets this week. Tech selling off again. Ben, we're not going to talk about SpaceX, right?
Yes. It's coming back to earth, right?
It came back down to earth. Exactly. So listen, tech stocks, especially AI-linked stocks, they did fall pretty hard this week. And it wasn't really any specific single event that triggered the selling. But we're here to cut through the noise. And it's really a lot of the same issues we've had to discuss here before on our show numerous times. People are worried that all of this AI build out is simply costing too much money. And it's this uncertain potential customer demand. And is it profitable? Specifically, the skyrocketing costs of the AI build out is causing the problems. And let's unpack these specific costs. So first is components and materials. The cost of the components and materials that's needed to build all these data centers right now, it is surging. And it's things like memory, semiconductors, computing power, networking, electrical power. You need all the commodities like, copper for all the construction. This surge is being driven by these AI companies and hyperscalers as they're actually competing with each other for these limited number of resources, and it is relentlessly driving prices up.
And Matt, you mentioned hyperscalers. By the way, that refers to companies or organizations that operate these massive data centers designed to handle just this enormous amount of data and computing tasks. So companies like Amazon, Meta, Microsoft, Google, those are what we mean when we say hyperscalers. And get this, Matt, I read that about a year and a half ago, there was 0 data centers in America. Now we have, get this, 5,500 of them. And it's not enough. They're popping up everywhere.
Wow.
Yeah. All right. So the second part of what's driving up the costs is the personnel and talent. So the amount of money being paid to AI scientists and programmers has gone exponential, with reports of high-profile AI professionals getting pay packages worth $100 million or more. Matt, we got in the wrong business, man. I should have been an AI scientist
Wrong business.
or something. Seriously. And
Wow.
this was highlighted very recently on Monday of this week as Alphabet, which is a pretty high-paying organization, lost 2 of its top AI people to OpenAI and Anthropic, respectively.
Now, the impact of all these ballooning costs for AI build-out is this insatiable need for more capital. It's like this giant arms race. And especially in an environment of this still paltry AI-linked revenues that are out there. So what it's resulting in is 2 main things. There's this destruction of this free cash flow amidst some of these largest, previously most profitable companies in the world. And then 2, it's actually forcing them to issue stock or bonds and debt to build up this capital in order to continue to pay these exorbitant prices to build out data centers that hopefully one day will produce that large amount of revenue they're hoping for.
Think about it this way. So SpaceX, Anthropic, and OpenAI, they don't want to go public. They have to go public to be able to secure the capital needed to keep spending. And between SpaceX, Anthropic, AI, we will see 3 of the largest IPOs ever. And by a function of maybe 2x to 3 times larger than the previous largest. And while these concerns are legitimate, guess what? We do not think that we've witnessed over the past few days signals a trend change. First of all, these companies have the money. And Oracle, which is by far the canary in a coal mine for cash flow stress in the AI space, as it's proportionally spending more than its peers. By the way, it's basically spending all its revenues on AI infrastructure. But it still had no problem accessing the capital markets. And similarly, while SpaceX was a huge IPO, there's likely to be plenty of demand for Anthropic and OpenAI later this year.
And critical. Secondly, there's not an indicator that any of these companies are going to stop spending. They're like just to the exact opposite, actually. The AI companies and hyperscalers are doubling down and haven't wavered for a minute. So we're reminded of that just this week from one of the biggest earnings we were waiting for, Micron. And now Ben, right? Huge.
That might be my new favorite stock all of a sudden.
Yeah,
SpaceX is so yesterday.
Yeah. You're done with that, right?
Yeah.
So that really begs the question of, why is Micron your favorite? Why is it so big? Is it the most important company in the world right now? And it's interesting that the tech sector is taking its cues from this understated memory chip manufacturer just based out in little old Boise, Idaho. And you can argue it's become, if not the top, at least one of maybe the top 3 most important companies in the world, maybe along with NVIDIA and Google.
And that's because it makes the computer memory chips that are critical to AI infrastructure and is a major supplier to companies like NVIDIA. And of course, NVIDIA makes the most sophisticated semiconductor chips in the world. So all of those are needing Micron memory. And it's hard to overstate how significant Micron's blowout earnings were, as the report implied that AI spending is not slowing down at all. And in fact, it's expected to continue growing at a rapid pace for the foreseeable future. And their CEO, Sanjay Mehrotra, whose company is facing a massive supply crunch due to the unprecedented AI demand, said that him and his team currently do not have a line of sight as to when the memory supply will be able to catch up with the increased demand.
Wow.
Take that.
And remember, when we talk about these companies, we're not recommending you go out and buy them. We're just talking about them. So you want to make sure to not just buy it based off of these blowout earnings. But all that being said, with some of the sell-off in tech and the volatility, we're still very bullish. We haven't taken our foot off the gas in our advance and protect actively managed models that we manage for our clients. And as we've mentioned before, for some of our more growth-oriented models, we're pedal to the metal 100% in equities. And remember, we monitor our investment positions every day. We can get out of the market if we see conditions warrant it. It's called our advance and protect investment process. And if you're interested in learning more about our investment process, or about us in general, and you're a retiree or a pre-retiree, we have huge news for you. We have an exclusive educational dinner event. It's locally here at a beautiful country club on Thursday, July 16th at 5:30 p.m. We're going to cover new tax laws, how they impact your IRAs, required minimum distributions, tax reduction strategies, Roth conversions, and some of the biggest risks retirees face, including learning about our advance and protect process. Seating's limited. It's going to fill quickly. To reserve your spot, call 847-780-2980 or visit bnwealth.com. And when we come back, we're going to talk about how Medicare works. Don't go away. Welcome back. Thank you for tuning in. This is Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. I'm one of your hosts, Matt Nadeau. Of course, have with me my trusted, esteemed sidekick and co-host, Ben Barzideh.
Hello, everyone.
And we're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive local financial planning firm. We're right here in Barrington, and we're serving the greater Chicagoland area.
And big news. If you are a retiree or pre-retiree, we are having a fantastic exclusive dinner workshop at a beautiful local country club on Thursday, July 16th at 5:30 p.m. And during this complimentary event, we're going to talk about so many good things. We're going to go over the new tax laws, explain how it impacts your RMDs, talk about inheritance, estate planning, talk about tax reduction strategies, Roth conversion opportunities, the biggest risk retirees face. And of course, we're going to talk a little bit about our advance and protect actively managed investment approach that's designed to manage stock market risk and uncertainty. And all of this valuable information while you're enjoying a delicious steak in a beautiful, intimate setting. So seating is limited. It will fill up. We filled it up last time. We had, I think, probably over 100 people there. So to reserve your spot, call 847-780-2980 or visit bnwealth.com. We look forward to seeing you on July 16th.
Yeah, we'd love to see you all. Come say hi to us. Tell us you listen to the radio. It'd be great to meet some of you out there. So anyway, let's dive into our topic today. It's how Medicare works. So if you're out there and you're like 30 listening to us, you can probably zone out. Like, this is going to be a while before you need it.
Yeah.
So
come back in like 15 minutes.
Yeah, it's all right. We're not saying go away permanently, but it can get a little in the weeds. But we are going to talk about it because it's an extremely important government program that almost all of us are going to need to use later in life. And yep, it's Medicare. It's America's favorite healthcare program. And what we want to do is just try to clear it up a little bit, explain it to you so you don't have to spend 3 hours going through government websites trying to figure all this stuff out.
Gosh, God, what could be worse than that? All right. So let's talk about it. And there's different parts to Medicare. There's Part A, Part B, Part C, Part D. There's Medigap. There's Medicare Advantage. It can be very confusing. But here's how it works. So Medicare is the federal health insurance program primarily designed for people that are 65 and older, as well as certain younger individuals who have disabilities. And by the way, you are required to sign up for it during a 7-month window that starts with the 3 months before your 65th birthday, the month that you turn 65, and then the 3 months after. And knowing the basics of Medicare Parts A, B, C, and D, as well as Medigap, as well as Medicare Advantage, can really help you as beneficiaries choose the coverage that best fits your healthcare needs and budget.
All right, let's go through these. So we're going to start with A, Medicare Part A. This is what we call hospital insurance. And it helps cover, for example, your inpatient hospital stays, skilled nursing facility care, hospice care, and some home health services. A good way to remember it is that A stands for admission. If you're admitted to a hospital, Part A is usually helping to foot some of the bill. Now, most people aren't actually even going to pay a monthly premium for Part A because you paid Medicare taxes while working. Congratulations, you paid for something decades ago, and now the government's going to let you use it. And in 2026, beneficiaries are responsible for deductibles and cost sharing when hospitalized. While Part A covers many hospital related expenses, it doesn't cover all costs, which is why people then have to sometimes seek this supplemental coverage that's out there.
And by the way, I forgot to mention that when we're talking about Medicare, when we're saying Part A, Part B, Part D, that's referring to traditional Medicare. So there's the traditional Medicare option we're going to talk about. And then there's something that is the Medicare Advantage. That's like a separate thing. So we're on to traditional Medicare. Matt went over Part A, that covers your hospital expenses. Well, then there's Part B, which is the medical insurance. So Part B covers doctor visits, outpatient services, preventative care, lab work, durable medical equipment, and many other medically necessary services. Basically, if you're not sleeping somewhere overnight in a hospital, Part B is probably what's involved. And unlike Part A, Part B requires a monthly premium. And most beneficiaries pay a standard monthly premium, although higher income individuals pay more. And Part B also includes an annual deductible and generally requires you to pay 20% of the approved medical costs after the deductible is met. So basically, you're responsible to pay the remaining 20% out of pocket. And actually, that may not sound that bad until you discover that there's really no cap. So 20% of like a $50,000 treatment is not exactly pocket change. So together, Part A and Part B make up what is commonly called original Medicare or traditional Medicare.
Right. Now we get into what's known as Medicare Part D. So here's, you want to think of drugs, prescription drug coverage, right? So Medicare Part D is in place to help cover those prescription medications. So coverage is provided through private insurance companies, but they need to be approved by Medicare. And monthly premiums, again, are going to vary by plan. And as a beneficiary of this, you may also have deductibles, co-payments, co-insurance. So there are these drug formularies that are different among the plans. So it's important that you review the coverage on like an annual basis to make sure that the medications remain covered that you need and they're still at the lowest possible cost.
No doubt. And then, so next we have Medigap plans. And think of this as kind of like the sidekick. So Medigap, also known as Medicare Supplement Insurance, is designed to work alongside the original Medicare. And these plans help pay out-of-pocket costs, such as deductibles, co-payments, and co-insurance that Medicare does not fully cover. So, like I said, it's kind of like your trusty sidekick. So imagine original Medicare is a pizza with a few slices missing. Medigap comes along and says, hey, don't worry, I brought more pizza. And Medigap plans are standardized and identified by letters, such as Plan G, Plan N, and others. And by the way, the most popular Medigap option by far is Plan G.
I think you were supposed to bring the pizza and fill in the gap for lunch today.
That does sound good. I'm kind of hungry.
All right. Well, you mentioned Plan G is probably the most popular one. And really the key is, why is it so popular? And what we've seen is it covers nearly all of those out-of-pocket costs that are associated with original Medicare, except for the annual Part B deductible. So after the deductible is met, beneficiaries typically have very little additional cost sharing for Medicare approved services. So many retirees go out and choose Plan G because it offers predictable healthcare expenses. And it gives you typically nationwide provider access and then minimal out-of-pocket surprises. So again, monthly premiums are going to vary by age, your location, who the insurance carrier is, but right now they generally range from anywhere from $100 to $300 or more per month for that Plan G.
All right, so that handles traditional Medicare. Now we're going to go to what's called Medicare Advantage, and this is sometimes referred to Medicare Part C. It's actually an alternative way to receive Medicare benefits through private insurance companies. And these plans must provide at least the same coverage as original Medicare and often include additional benefits such as dental, vision, hearing, fitness programs, and prescription drug coverage. Think of Medicare Advantage as the all-inclusive resort version of Medicare. So, covers everything. Now, Medicare Advantage plan have low or even zero monthly premiums beyond the Part B premium. However, beneficiaries are typically responsible for co-payments, co-insurance, and network restrictions. That's a big one when receiving care.
All right. Well, let's talk about a few pros and cons when people are wondering, should I do Medicare traditional or Medicare Advantage? So traditional Medicare with a Medigap policy, here's the pros. You can see any provider nationwide who accepts Medicare. No referral requirements for specialists. Predictable healthcare costs with that Medigap plan, and usually excellent coverage if you're traveling frequently. Now, the cons are higher monthly premiums when you're adding those Medigap and Part D coverages. You might need separate plans for prescriptions and supplemental coverage, and dental, vision, and hearing benefits aren't typically included unless you get it in a Medigap additional coverage. So, in other words, original Medicare can feel like you're having to subscribe to several different streaming services just to make sure you get to see all the shows that you love.
Now, let's talk about the all-in-one Medicare Advantage. So the pros are it's often lower monthly premiums. It includes many extra benefits such as dental, vision, and hearing. It frequently bundles prescription drug coverage into one plan, and it's a simplified all-in-one approach. Here's the cons. Provider networks may limit doctor and hospital choices. That's a big one. Referrals may be required in some plans. Higher out-of-pocket costs can occur during serious illness, and coverage may vary with traveling outside of the service areas. So, Matt, this looks like one of those deals that sound really good and cheap on the surface, but comes with all these extra headaches. Like when you're all excited about using your airline points to buy a ticket and you find out that all the good days for traveling are not available to buy with points, right?
Right. Well, listen,
Running out of time.
deciding what option's best for you is important. You oftentimes want to work with a professional to understand that. You want to take all these considerations into plan. There's a lot out there, but we are running out of time. So again, I'll remind y'all, if you want to come to a beautiful dinner, learn more about stuff like this, we have our educational workshop Thursday, July 16th at 5:30 p.m. Give us a call at 847-780-2980 or visit bnwealth.com. All right, we're out of time, and we'll see you all next week.
God bless everyone. Bye.